All right, guys. Welcome back to another video. I'm gonna start doing these videos not as a, the title of the video might be a little provocative, but what I'm trying to do here is educate, hopefully spread awareness on deals for both borrowers, but also, there's a lot of these private money lender individuals who get sold, risk-free income by lending on deals like this, and unfortunately, they're not always good deals. So I wanted to walk through this. This is a post off Facebook. I'm going to start a series where I just critique these deals. I'm not trying to insult anybody or anything. I just want to kind of point out the flaws in it, and I'm going to take notes in this Google Doc here. So without any further ado, we're going to get right into it. So this person is in need of an asset-based lender in quotes. Usually when someone does that, it means don't look at me at all as a borrower. That's usually what that means, having had thousands of these conversations. I know what that means. No credit checks. There's nothing wrong with no credit checks. Really, we have programs where we don't check credit, but we still look at the borrower's ability to execute, experience, location, cash, blah, 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 right? Okay, 100% funding. No, I don't have cash reserves or partners. That should be a red flag for anyone. And I cannot pay you money up front. I mean, that's pretty standard in the loan business. I know there are some lenders out there that take quite substantial upfront payments. I don't know why they do that. It's terrible. It's a waste of time, and it's a risk the borrower shouldn't have to take. So no upfront payment, no upfront money, no problem. Maybe if you want to do an appraisal, sure, but there's nothing wrong with that. So the problem will become evident in the scenario. So purchase price $300K, sure. And I'm just going to take some notes here just so we can talk about this. So purchase price $300K, nothing wrong with that. ARV $415, that seems like a good spread. So $300K purchase, ARV with a spread, gross spread, $115K. That's gross, not net. Okay, no rehab needed. It's turnkey. That's signal number one. Equity day one, $115,000, right? We said it's gross, right? There's no payments, nothing, nothing included in that, just gross equity, sure. Clear exit, refinance into DSCR or resale in 12 months. So now DSCR or resale, I don't really understand that, but okay. All-in loan request. 373,710. Okay, so all-in loan request. This includes setup and reserves. Now, this post was posted in a bunch of other groups, and really it included closing costs, EMD, includes everything. Like she said above, she has no cash. So it includes everything. And now, if we look at our spread, really, if I do the math on this, 415,000 minus... Okay, so 41,290. That's still a decent spread, but again, this borrower has no cash. She's borrowing all of the money. We can make some assumptions based on what a lender that would do this, but now something we need to look at is what is the leverage of this deal. So 373,710 divided by 415 is 90% LTARV. So she wants a loan that is levered at 90%. So I'm going to break this down a little bit. So let's assume she sells it. Okay, so let's assume she sells it in 12 months. Now, with lenders and people who look at this stuff every day, it's pretty obvious why this is a bad request and super high risk for the lender and virtually no risk for the borrower other than potentially a foreclosure on her background. Okay, so let's assume a sale. There's going to be expenses that come along with that sale, and realtors, whatever. So let's assume again we're going to assume no monthly payments. We're going to assume this debt is completely free. And so I'm just going to put a safe assumption in here. Assume a sale where there's 5% cost associated with the sale. So now she's 95% and not LTRV, but basically 5% margin, not including debt service, meaning no payments. Okay, most lenders are going to want some payments. So let's assume 12% per year, which would be 12%, right? 12% of the loan amount, which would be approximately 3.7K per month, which would equal, I'm just going to round this because it doesn't really matter. We're going to call it 36 grand for the term of the loan. You can tell very quickly that this deal is unprofitable. Now, I did not include income. I'm doing this just including, I'm not underwriting it for income because the way she's wanting it, she doesn't want those things to be underwritten, right? She said, asset-based, I can't pay any money, 100% funding, but, and she doesn't give an address, but let's assume for a minute that she's bringing in $4 grand a month. I don't know what it would be. This is her first deal. Maybe she's backed up by stuff, but I'll just assume that. So the deal's unprofitable without further information. But, and it tells you it's in Stone Mountain, but I'm going to assume just a 4K. So I'm going to assume for her benefit that this gets rented. She closes and it's rented the next day. So she's making $4 grand per month. So she's cash flowing $300 per month, not including taxes and insurance. Okay, so then you could argue with me and go, well, maybe it's $5 grand a month. Okay, maybe it's $6 grand a month. Maybe it's $7 grand a month. It's not good to give the borrower the benefit of the doubt when they don't let you do that. Like, they don't give you enough to do that, right? No experience, no money, no cash. So she can't get the plate. There's startup costs, right? Usually there's some costs associated with getting a tenant in, some marketing. You're going to pay a realtor, whatever. So the point here is not to do an exhaustive underwrite, but to simply say that it is hard on paper to show with the leverage she's at that she's going to make a profit. Maybe she's going to cash flow $300 a month, maybe, and then she's going to sell it for a loss. Maybe that's the grand plan, which doesn't make any sense. Okay. Hopefully the flaws are starting to be obvious. Now, I assumed that she was going to sell it, but let's assume that she's going to refinance it. Most DSCR lenders want to see credit. They want to see cash reserves. They will refi at 75 to 80, and sometimes we'll do 85% LTV. So what's going to happen now? Assuming all things equal, assuming good credit, positive, healthy DSCR ratio, she's still bringing money to the refinance. Okay, so this is the problem with this scenario when people tell you, hey, don't look at anything, it's asset-based. The asset-based aspect of this deal doesn't work. It doesn't put the lender in a safe spot to recuperate their money. It doesn't put the lender in a safe spot to get paid every month. So again, this is not to and this wasn't an exhaustive thing. I'm just pointing out things that people should be looking at. You should be able to quite clearly articulate the profit strategy, the cash flow strategy. If you're going to put a lender in first position and in particular ask them for 100% plus financing, right? She wants more than 100% of the purchase price financed and no risk of her own. So this is not a good deal. I gave her some feedback. This was out of a Facebook. I gave her some feedback that was, hey, this deal doesn't work. And it was a canned response of I've calculated multiple exit strategies. And as you can see here, even with just some quick math, it's very difficult to envision what type of exit strategy is going to get the lender paid back in full and get them, they lend money so they can make interest payments every month. It's quite difficult to see that. So I don't know. I titled this video as a way to get clicks, obviously, but really it's a educational type video. I'm going to be doing more of these because I see these all the time, and both private lenders who are in the space who get promised a sweet first position loan, and then they don't know how to underwrite. They just get told it's real estate, so it's safe. This is for you, and then also if you are doing these types of deals. You need to do this kind of math. Now, you can do a more exhaustive underwrite for this. I offer 2 free AI tools, DSCRanalyzer.com and freedealanalyzer.com are both tools I created. This is kind of a plug, but whatever. It's to help you. They're free. I don't slip in a free trial credit card or anything. They're perfectly free, and they do this, but they do it quicker, and they also pull from more data sources. Yeah, with that, if you have any questions, throw them in the comments. Otherwise, peace out. See ya.